these truths to be self-evident.
That all men are created equal.
As a member of Congress, I get to have a lot of really interesting people in the office. Experts on what they're talking about.
This is the podcast
For insights into the issues.
China, bioterrorism, Medicare for all. In-depth discussions.
Breaking it down into simple terms. We hold
these truths.
with Dan Crenshaw.
The Eagle has landed.
Welcome back, folks. It's tax season is upon us, so you're hating your life, and I'm dreading it. And we're all thinking of procrastinating and pushing that deadline off as much as possible. And as our annual celebration of taxes go, we will do a tax podcast, and you will learn all you need to know about taxes. Not how to do your own. I don't know how to do it. I don't think this guy knows how to do them, but he does know a lot about tax policy. That's what we're here to talk about. Adam, Michel, thanks for being on.
Thanks for having me on. I'm excited to be here.
So Adam is the director of tax policy studies at Cato Institute. Before that, a bunch of different think tanks from Northern California. Welcome, Adam. Thanks for being here.
Yeah.
So let's get right to it. I mean, we'll talk about specific stuff and obviously reconciliation bill that I think my audience has probably heard enough about by now. Is mainly driven at keeping the TCJA, the Tax Cut and Jobs Act, in place, or at least certain provisions of it. We'll see how that goes. It's moving along slowly. Tax Cut and Jobs Act was passed in 2017. These are the referred to as the Trump tax cuts. Although one of my colleagues, Kevin Brady, really wrote the bill here in the House and pushed that through the Senate, and here we are. But as most good things do, they expire. So here we are on that. But moving out of that context for a little bit, like what is it? I always like to ask tax experts, like what's your if you were to build a country right now, what's your ideal tax structure?
Yeah, that's a great place to start. I think we often lose sight of the big picture.
Yeah, what are we even looking
for? In some of these conversations, it might be too in the weeds for the sort of beginning of the conversation, but I ultimately want a tax code that taxes consumption and not savings and investment, which is the sort of fundamental structural problem with our current tax code, is that it double taxes many forms of savings and investment, making it sort of more expensive to sort of put your resources into new factories and plants, and instead encourages people to spend their money today. And you need sort of investment to build long-run growth and sort of all the good things that come from that.
Yeah.
And so there's lots of different ways to get to that end sort of consumption tax framework. And I think within our current framework, my preferred direction is a consumed income tax, which is basically you tax income, but you have a full deduction for savings and investment. And this looks like how your 401k is treated,
So everything, it's like a no limit. Your bank account is your 401k in a way.
Exactly. And so there's a limited version of this
Or
called
it's the USA. It's Kevin Brady's
called
USA.
a universal savings account, which is a 401k for everything other than retirement.
Right.
They've been tried in the UK and Canada. They're incredibly successful and most useful for low-income people and young people who are reticent to lock their money up until retirement. And so it's a on-ramp to the savings system. It gets you towards that consumed income tax base.
On the USA, is there a time limit, or is it just as long as you put it in the account, it's not taxed? You can take it out the next day? Like, how does that work?
Yeah, that's the ideal structure you can put the money in, you can take it out whenever you want for whatever reason you want. But because it has this tax advantaged feature to it, it encourages people to keep the money in for retirement, hopefully, but also starting a business or putting your kid through school or sort of whatever other life priorities.
Maybe like 48 hours, so it doesn't just become this like obvious wash. I don't know.
Yeah,
or does that even matter?
Sure, but there shouldn't be. But if you're taking the money out and spending it, and it's designed correctly, that shouldn't be a problem. And it's
although
not
in this new world, let's call this in the Adams country, whatever. We'll give you Canada. Yeah. We'll give you Canada.
Thank you.
So you gotta deal. Yeah, that's why you got to deal with some interesting political situations up there. So
Canada already has a USA, so we're
they do.
Good. Yeah, Canada and the UK have this system, and it works for them. It's incredibly popular.
Okay, so they effectively aren't really taxing income then.
They are Correct. Money, there's limits on how much you can put into the accounts where they've been
Okay,
tried.
so they have some limits.
So there's annual limits or lifetime limits depending on the system.
Yeah.
And so,
And in theory,
but
in
you
our,
are
in our
moving
world,
in
we
that
could
direction.
do limits too. If,
Correct.
Because, you don't want to give all
The
the
one
millionaires.
that was proposed in the Ways and Means sort of TCJA 2.0 effort in 2018, what had like an annual limit of $2,500. I've been an advocate for a $10,000 annual sort of limit.
Okay.
I think that's a good entryway into.
Yeah, I was going to
the
say, I
world.
was like, if we're really trying to get, again, I'm giving you your ideal world. I'm not telling you what.
Yeah, my ideal
what
world
legislation
is
to propose
is
in
no
our
limits.
world. Okay.
Exactly.
Yeah, because that's a more interesting conversation. Like
Yeah.
we're starting a country anew. What does that look like? You got to play in the real world sometimes. Be like, okay, we'll start 2,500, 10,000. But yeah, but if you're going to help middle class people, 50,000 would be. It seems like a good place to start. You can make an argument for it, but then you still got to get your revenue from somewhere. So I mean, in Texas, we don't have any income taxes. But I guess you could, in a way, we tax consumption, but a very specific kind of consumption, which is owning property. But that's like, I guess you would call that a tax on investment and savings. Really, it's a tax on an investment. Well, no, it's a tax just on. It's a little bit of everything.
Yeah,
property taxes.
Property taxes.
Talk to me
Yeah,
about
it's
property
sort of like a wealth tax in a way.
Yeah.
But
Yeah, it
it's but it's also, a lot of economists like the property tax because you're taxing something that is hard to hide. It's easy to count, and it's so therefore it has a lot fewer distortions than taxing income or investment, which people can work less, they can invest less, and so property taxes have some of the least distortionary effects of any of the taxes.
That's true.
And so,
But still not ideal in Adam world. So what's
I think we should have either a consumed income tax or a straight consumption tax. And if I'm sort of designing the system anew and I can put constitutional constraints where I'm not going to have an income tax be introduced later, then something like a sales tax or a value added tax is sort of the ideal way of getting to consumption. But I am not a fan of introducing those taxes into our current system because unless you're going to repeal the 16th Amendment, you're going to end up getting an income tax and a consumption tax on top of it, which is sort of the European Union's problem, where they have all these taxes layered on top of each other.
Yeah, I mean, we have sales tax too. So I mean, we're all living in that world, I guess.
Correct, and
they're not
sort
extreme,
of at the federal level. States have sales taxes, but they're significantly lower rates than what the sort of OECD countries charge.
That checks with about I think every time we have this conversation with a tax economist, they say about the same thing. And of course, then the devil's in the details on how we actually achieve that, and then what we do in the real world. So in the real world, we're trying to renew the Tax Cuts and Jobs Act. So talk to me about that. Like what were people's taxes like before and after the TCJA?
So the bill that was passed at the end of 2017, so in 2018 is when it went into effect. The law did a whole bunch of things. For individuals, people's taxes were cut between like $1,000 to $3,000, whether or not you're an individual or a family. But it was more than just a tax cut for individuals on the individual side. So rates came down.
So like I think every bracket got maybe a 2% ish.
Yeah. So there was tax cuts all up and down the income distribution. Rates came down almost across the board. The zero rate, the standard deduction, was doubled, which is a massive simplification in the tax code because about 30 million fewer people itemize their taxes now and take the standard deduction. Itemizing is the list of sort of complicated, having to have receipts and detail your state and local taxes and your mortgage interest and a bunch of other stuff. And instead, people are just taking the simpler standard deduction. So does
that save money, or does it cost I don't like to say cost the government money when we talk about cutting taxes. Just because you get less revenue doesn't mean it's a cost to you, but whatever. But that does get into the debate that we're having on reconciliation, which is an interesting one, but we'll save that one for a second. What's the counter argument against just doubling the standard deduction? Would it mean that people can cheat the system easier in theory?
No, it's if you are just doubling the standard deduction and making up for it with limits on itemized deductions, which is what happened, which is the cap on the state and local tax deduction. Okay. And there were changes to the mortgage interest deduction in TCJA. you can do that in a revenue neutral way. And my ideal world is getting rid of all the itemized deductions. That's where people game the system and just have one standard deduction that everyone takes. And so this was a move in that direction. And it was actually paired with, in 2017 and before, there was a system of child independent exemptions, and those were repealed and rolled into the larger standard deduction and the increase in the child tax credit.
Okay, so
that was an additional sort of simplification in that change.
And a lot less people using it, so there's in theory less. That's probably, I think it's the only way it was simplified. I'm not sure. Nobody's taxes. I don't think anybody at home feels like their taxes are simple.
We're
not yet to the postcard taxes yet.
Yeah, well, I think that was some overclaiming, right? Like Republicans forever have said you're going to be able to deal your taxes on a postcard.
Yeah, in Adam's world.
I think that isn't. Yeah, in my world, hopefully you can get there. But the challenge is all the things that make the form so long to do your taxes are all of the special interest things that people
right. Well, I was going to say, like, you talked to us about the constituencies. Constituencies, special interests, it's all the same thing. People don't like hearing that because they view themselves as a constituency. You're all special interests. You're all represented by special interests, wherever you work. I had to break it to you. And there's a lot of things in the tax code that have constituencies. So the politics are very difficult.
That's exactly right. And I think going into 2017, there was this thought that you can't touch any of these things, and that made reform that much more challenging. But going back to 2017, big strides were made in limiting a lot of the special interest provisions. The SALT deduction caps were a massive win in 2017. That's where they're talking about rolling some of that back. But Republicans voted on that and made that big improvement to the tax code. The mortgage interest deduction was scaled back. That's another sort of previously thought of as sacred cow. And so you can tackle these things if you're doing true tax reform, where you're not just broadening the tax base, but you're using that higher revenue to then lower rates across the board. And that's sort of the classic recipe for tax reform that was followed in 2017 and could be followed again this time around.
Yeah. Okay. What else? The child tax credit was doubled.
It was paired with the elimination of the child independent exclusion.
Yeah.
So this change made the tax code more progressive because a tax credit is more valuable if you're in lower income tax brackets.
And the biggest one, maybe from an economic standpoint, was the corporate rate.
Yeah, so everything we talked about was on the individual side, and then there was a whole host of business tax reforms. If you remember back to 2016, 2017, the United States had the highest corporate tax rate in the developed world. Businesses were just straight up leaving the United States to get out from under our tax system. These were called corporate inversions. They were in the headlines basically every week. And so the 2017 tax cuts lowered the corporate rate from 35 to 21 at the federal level, putting us sort of in the middle of the pack of our biggest trading partners. And that was paired with something called full business expensing, which allows businesses to write off the cost of their investments in the year that they're made. And this is a really powerful investment incentives instead of having to spread them out over many years.
Okay.
So
the word I can't say, amortization.
Amortization or depreciation in this case. And so in some cases, you have to spread out the cost of the new piece of equipment or tool that you buy for your factory over, say, 20 years. And a deduction in 20 years is a lot less valuable than a deduction today. And so expensing just says you get to recoup those costs today, just like you get to write off the sort of wages you pay your employees. You should be able to write off the costs of new investment. And that paired with the lower rate were the big drivers of the economic growth story that came out of the 2017 reforms.
And then now let's kind of switch to philosophy real quick, and that'll also explain why you just said what you said, that those particular taxes, especially on the corporate business side, or the big drivers of growth. I think that makes sense. But what's the philosophy of corporate taxes? What should the corporate tax rate be in Adam's world?
The ideal corporate tax rate is 0. It does a couple different things that are bad. I think the main one is that it obscures who actually
But
pays
you're
the
just
tax.
letting the billionaires get away with it?
Yeah. So the at the end of the day, someone pays the tax. The
What?
question is
What?
who? The corporation just passes that cost on to someone, and they can pass them on to the owners of the business, the consumers that buy the business's product, or workers in the form of lower wages.
Right.
And the economic literature.
So a corporation is not a person.
Corporation is not a person.
It's weird.
The economic literature basically says that workers bear most of the burden of the corporate tax in the form of lower wages and fewer job opportunities.
Yeah.
And so a corporate tax cut is a tax cut for all of the people that are employed by those businesses.
Yeah.
And the theory there is businesses invest in, and when they invest, that makes their workers more productive, and people are more or less paid. Their wages reflect their productivity.
Yeah.
And so if you are encouraging new investment, you're making people more productive. They can command a higher wage, and that's sort of how the economic story.
Or the
is
product
told.
just goes away. I mean, you tax them too much. There's some businesses just don't survive in that environment, depending on.
Correct, and then you have no investment from the
Right.
business, right? And this is what we saw after 2017. There were more jobs than there would have been otherwise. Investment went up, wages went up, and it sort of bears out this story as true.
Yeah. Another interesting point is revenue kept going up too for the federal government. I guess the counter argument would be that well, it would have gone up more, and we don't have the multiverse, key. So, I don't know, but counterfactuals are interesting. What it would have done without it, and I guess sort of that gets into a CBO scoring conversation, I suppose. Okay, but okay, I just want to get that out of you on corporate tax rates. I think that's interesting, and people should hear that. It's very easy to make an emotional argument about. Making sure the rich pay their fair share. I mean, the left does it, the populist right does it. They're out of control. I
think this fair share point is really interesting because you need to have a definition of fair share, which you can't really pin anyone down on. But if you look at what the sort of who pays the current income tax burden. The highest income Americans pay the disproportionate share of income taxes.
It's like
the top 10% pay like 70% of the income taxes. And then if you add in payroll taxes, that changes a little bit, but still the US tax code is highly progressive, and it's more progressive than basically any other sort of OECD, EU country. Like the reality of how other countries pay for their big government is not with high taxes just on the rich. It's with high taxes on poor people and the middle class.
I've seen data that shows it got more progressive after the TCJA.
That's correct. The pre and post TCJA, the highest income Americans now pay a higher share of the income tax. And that was designed very explicitly by Republicans to shift the income tax burden up the income distribution by giving the largest tax cuts of the share of taxes paid to the lowest income Americans. And
what is the highest bracket? Go ahead. So finish your thought. Sorry.
One of the ways they did that was we talked about the child tax credit expansion. Because the bottom 20% of Americans don't pay any income tax. It's actually really hard to cut people's taxes that don't pay any income tax. The way you do that is you expand refundable tax credits. And so to make the distribution tables look right, the things that the scorers here in Congress give you guys, in order to give tax cuts across the board, you have to make the tax code more progressive, which is exactly what they did.
Yeah, I've seen other studies that show if people who make under $50,000 a year effectively pay no taxes once you start itemizing things, deducting things. I'm sure there's some people listening to this who would be upset by that claim, but it depends.
Yeah, it's on average. There are certainly the tax code is so complicated. Everyone has their particular sort of circumstance, and you have to remember that people pay payroll taxes if you're working, which has to be part of But the Treasury Department puts out distribution tables that show the sort of underlying distribution of taxes that include payroll taxes and the rest of the taxes in our system, and they still show that the bottom 10, 20% of income earners pay either negative tax rates or zero sort of on average.
Yeah. Also good context for these conversations because Democrats will make up all sorts of things.
Well, and this is where the left the major criticism of TCJA from Democrats is something like the highest income of 20% of earners got 60% of the benefit of the 2017 tax cuts. And that statistic tells you nothing other than
say the statistic one more time.
That the top 20% of earners got 60% of the benefit of the tax cut.
Like, what does that mean?
All that means is that the top 20% of earners pay 60% of the income tax burden. So if you lower everyone's tax rates across the board, of course, the benefits are going to look like the underlying distribution of who paid taxes.
Okay, I never knew that's actually what they were measuring in that stat.
Yes, exactly. So it's
You give them too much credit. I gave them too much credit. I was like, what did you come up with? I'd have to really dig into that.
You can sort of cook the numbers however you want to tell whichever story you want, which is a second ago I said that the largest tax rates as a share of taxes paid went to the lowest income Americans. And that is also true because you pay a much smaller share of taxes at the lower income levels. And so if you cut their tax rates in half or their tax burden in half from a couple $1,000s to $1,000 or whatever it is, that's a 50% reduction in taxes paid. And so that's sort of the dynamic that's going on. It's hard to cut people's taxes that don't pay a lot of taxes.
And they'll throw out numbers system. Like, so-and-so gets a $5 million tax cut, but this poor person only gets no tax cut.
And that person that
paying
paid
taxes in the first place, there's this thing called percentages.
Yeah.
But the problem with those arguments is they are emotional and they land a little bit. Then again, it's funny. It's very politicized because I remember seeing videos of people like in New York and they did this kind of man on the street kind of videos and like, hey, what do you think about Bernie Sanders' tax plan? And they would describe all this, and they're like, that's great, that's a good idea. Yeah. You're like, it's not about the policy, huh? it's just the team blue and team red.
Yeah, and it's a lot of it comes down to sort of a feeling until you've thought through it. But when you even in polling, if you sort of give people enough information to make
should corporations pay their fair share? Of course,
of course. But when you say but if you ask people, what do you think would happen if we increase the corporate tax rate? Like it would hurt or help jobs. They very clearly understand that it means you get fewer jobs and it hurts the economy. And so the framing is important in how we talk about these things.
There's kind of a current debate on the credit card. Credit card fees, interest rates, where it's an interesting coalition of the left and the populist right. Because the populist right also they like big government. They like to yell at big corporations and all the big whatever. Everybody's a boogeyman if you're rich, except for the rich populist right ones. I don't understand how that works because it's all bullshit. That's how it works because it's just a team sport to them. And so let's talk real quick about the credit card debate right now and what's right and what's wrong about that.
Yeah, so this is not my area of expertise, but it's basically what they're proposing is putting a price control on the rate credit cards can charge you on interest. And we know in price controls, whether they be in housing or any other market, they're incredibly economically costly. And if you can't charge the sort of market price for a service, you're not going to have the service. Yeah. And it
turns out they don't who's going to be hurt? The person who needs the service or MasterCard? Yeah,
exactly.
MasterCard's going to be fine.
It could, if you set the price control at the wrong level, you are basically saying that no one should have a credit card that sort of has the risk that is then reflected in a higher interest rate. Yeah. I love my credit card. I think it's a crazy invention where someone basically lends me money for free every month, and then gives me some points along with it that I can go buy things with. Sort of shutting down that system seems sort of absurd.
Yeah, I like my points. Still gonna figure out how to use them. Okay, so all right, so we've covered some philosophy. We've covered TCJA, what it did. Now it expires in 2025. We have a whole bunch of budgetary gimmicky reasons why it expires. What do you think about that?
Yeah, so the 2017 reforms, as you said, expire at the end of this year, 2025 more or less.
Hence our rush at the moment here.
Exactly.
In the House
That's why there's currently a conversation going on. They are made temporary because of rules in the Senate that require, it's called the Byrd Rule. I think you talked about with Paul Winfrey about this a couple weeks ago, where the rules in the Senate require that you can't have a deficit impact outside the 10-year window. And so the policies that go through this reconciliation process are often made temporary. And that is not ultimately, the reason they are made temporary is because Congress isn't willing to pair tax cuts with spending cuts. If you fully pair tax cuts with right sizing the sort of size and scope of government that it's paying for, then you could make them permanent and fit them in reconciliation because you're actually sort of making balance outside the window. But because Congress likes to do tax cuts and not spending cuts, then you fit in this box and you put a cliff and you say, don't worry, we'll come back and fix it in 8 years, 10 years.
Yeah. And we've got a pretty wide window at the moment between what the Senate wants to do, what the House wants to do. We had about a 1.5 trillion, right?
Yeah.
I'm looking at for those of you listening, I'm looking over at my staff. 1.5 trillion in cuts, but there's still, in theory, according to the way CBO scores it, curious in your thoughts on this. But take all the reconciliation talk. Let's just talk about I have a bill to keep taxes the same. My bill says taxes stay the same, just for 10 more years. Like that's all my bill says. That will come in at a $4.5 trillion cost for some reason. Now the person at home might be like, wait, what? No, you're not. But you're saying do nothing. Yeah, I'm saying do nothing. Do nothing for 10 years. But that costs money. Yeah, according to our own rules. So.
So it reduces revenue from the CBO baseline, which is this thing that Congress has told CBO to construct. Yeah. And most Americans
which is current
think
law. See, the baseline is based on current law, assuming no changes in current law.
For tax policy. It's actually constructed so that it's biased against tax cuts and biased towards higher spending. Because a lot of the spending is actually done on a current policy baseline within the CBO baseline. But on the tax side, most Americans think about policy in a current tax policy in a current policy sense, and so they think that my taxes next year should be the same they are this year. And so this sort of discontinuous policy Congress has put in place is just not in their mental model. And so the people will be shocked next year if you do nothing and their taxes go up by several $1,000s. Yeah. That is not to say that extending them doesn't make our fiscal situation worse. I don't think it's a tax problem, but you have to then also address the spending side of the ledger. And that's the current disconnect.
Yeah. What do you think happens to the economy? And which ones actually expire? So just the income and deduction?
So the main permanent piece of 2017 was the corporate tax cut. And that was done because we know that permanent tax cuts are the most pro-growth, and Congress understood that in 2017. All of the individual tax cuts expire at the end of the year, and some of the other business provisions like expensing that I was talking about are currently phasing out. And so almost all of it expires and will have to be renewed. Okay.
We passed a bill out of the House to fix some of that. It was even bipartisan, although it never got taken up by the Senate. I think it gets taken up in this Congress. So especially for the business-minded folks listening, what are some of the main pro-growth investment style business tax provisions that we're hopefully looking at for reconciliation?
Yeah, so there's sort of like big three that were in TCJA and are currently expiring or have expired. One is full business expensing, or 100% bonus depreciation, it's also called. And this is currently in the process of phasing out. The second one is full deduction for research and development expenses. And this is instead of getting the full deduction, businesses now have to amortize it over 5 years. And then the third is some changes to how interest can be deducted. There's a base from which is calculated, and the base is sort of became more restrictive, and you're now considering making it a less restrictive base. And then the sort of fourth one that I like to add to the list is something that President Trump has talked about, and that's a 15% corporate rate. I'm not sure how seriously you all are discussing that, but
it's a Ways and Means conversation.
It's one of my, if you were to add something to the bill, a lower corporate rate would be one of the most pro-growth additions you could add.
Well, like you said, it should be zero. I don't know what the, again, quote unquote, cost is to lowering it to 15%. Do we have any numbers on that off the top of your head? Or?
I don't have the number off the top of my head. It's several $100 billion. Yeah. I recently had a piece that looked at the cost of the big three and a lower rate to 15%. And it's about the same in the last year of the budget window as repealing the open-ended IRA credits. And so it's not a the sort of, there are plenty of ways to offset some of these changes and make the full package more pro-growth. But it's really whether or not the will is there to do it.
Yeah, it's reconciliation. There's just so many elements to reconciliation, and the idea that we were going to get it done by May is I've always kind of chuckled at that idea. But it does have to get done. So tell us a little. Go ahead.
Oh, so the importance of getting it done before December, when the full thing expires, is businesses and individuals are forward-looking. Mm-hmm. And if businesses don't know if you're going to extend all of these things until the end of the year, they can't be planning for 2026. Like, what investments are they going to make? How are they going to expand their businesses or bring manufacturing back to the United States? All of those decisions are just on hold until there's a decision made. So it's the sort of need to get something done, give some certainty to markets in this realm is one of the sort of main reasons why this needs to get done sooner rather than later.
Yeah. Well, that makes a lot of sense. Having some certainty in the business world is everything. Real quick, what did the IRA change? The Inflation Reduction Act. It's
wonderful name.
We're not all experts on that because none of us voted for it in the Republican side. So, but what tax provisions did it put in place? 15% corporate minimum. Maybe what effects that had. Some of the other production tax credits that you talked about.
Yeah. So on the tax increases side, it had a tax on stock buybacks and an international corporate minimum tax at a 15% rate. And those two pieces were paired with at the time Congress was told about $270 billion worth of energy tax credits, things like the production tax credit for wind and solar, and credits for green energy production, manufacturing credits for the manufacturing of solar panels, EV tax credits. There's a whole bunch of stuff. It was supposed to cost under $300 billion. After the law was passed, now both JCT and outside scores think that that package of tax credits will cost somewhere in the realm of $1 trillion over 10 years. And so the sort of the scoring miss is its own story there. But the bigger story is the fact that there is now $1 trillion worth of what is effectively spending in the tax code that is largely in two tax credits, the PTC and the ITC, the production tax credit and the investment tax credit, that are open-ended because they're, rather than time limited like most tax credits are, they are tied to greenhouse gas emission targets that some of the energy scholars at Cato have done some work and basically think we will never trigger that phase out of those two tax credits. Yeah. And so by the sort of over the next 25 years, in 2050, these credits could be costing like just shy of $200 billion every single year if they're not reformed.
For us laymen, what's the difference between a deduction and a credit? Let's just speak to that, please.
Yeah, so a credit is, once I've sort of calculated my taxes and I owe the government $10 in taxes, a $1 tax credit is just I pay $1 fewer less to the federal government. Deduction is something that you do before you calculate your taxes. So if I have $100 in income and I get a deduction for $10, I then pay taxes on sort of $90 of income. So
the credit, in theory, what if you owe $1, but you've calculated a credit of $2? In theory, you can make money. And is that what a lot of these companies are doing?
Yeah. So on the individual side, this is called a refundable tax credit. The child tax credit and the EITC, the earned income tax credit, work like this. On the business side, there's fewer refundable tax credits where you actually get a direct payment from the government. Okay. But the IRA credits did something new where they actually set up a market. So just to be clear, I'm just trying to clarify this for the audience. Refundable means, in theory, you could make money. That's just how poor people can end net positive, like you said before. Net positive or have a negative effective tax rate.
There's less refundable business. We don't do that in the business world. You can end up paying zero, but you can't get paid.
We do fewer of them until the IRA was passed.
Okay.
And the IRA set up a system where you can actually sell your tax credits if you have zero tax liability as a business. And so while you're not getting a direct payment from the government, you get a direct payment from a different company that then gets to claim your credit for you, essentially.
Interesting.
And so this is another way.
They both kind of went out because of whatever the market is, and I'm sure there's a broker system for this, and there's a whole other
and a whole new
industry.
Constituency to keep these things alive.
Yeah,
exactly. And this is another reason why these credits are
Can anyone buy
so
those
expensive.
credits?
I think that any related business can that has a positive tax liability, but I would want to double check.
Is that how like airlines say they're going to net zero?
So it's a similar system where they're
never figured that out.
Like someone has like a system by which they're creating these carbon offsets and then they sell them, and who knows whether or not that's real or not. But it's a similar sort of trading scheme.
Yeah. Interesting. Okay, so I already did all that. I don't think we know. I don't even know what our folks on Ways and Means. I don't think they know. I think it's a little too early to tell on what they're considering, whether the changes to the IRA or anything. There's frankly so many factors in all of this.
Yeah, this pot of IRA credits though should be some of the lowest hanging fruit in order to find offsets to help to help pair with some of these other tax cuts that are being considered.
What would an easy policy on that be? Is there what's the aside? You're not going to get rid of them. Again, the constituency is too big. But what are some proposals?
Yeah. So the right policy is to get rid of them, rip it out by its roots. This is Democrat constructed energy policy. Yeah. And if Republicans leave it in place, you are implicitly sort of buying into the idea that there needs to be all of these green energy sort of industries that are built on government money in perpetuity. Like most of these industries are not going to be stood up and exist on their own after the fact. They exist because there's government money flowing to them. The sort of wind and solar tax credits were put into place 30 some odd years ago. Yeah. And the argument was these are temporary to get the industry off the ground. Yeah. And every year the lobbyists come back and say, hey, we just need a couple more years of this to sort of make sure that the industry is solid. There's obviously lots of middle ground between sort of ripping the credits out from the ground to leaving them fully in place. It's sort of a question of how far out in the budget window you start making changes. Mm-hmm. But I think a good middle ground is anything that's broken ground and sort of is counted on the credit as of today or whatever day you pick, can sort of continue to get those benefits. But anything going in the future, any new decisions that are made need to be made not with the government subsidies in mind. Yeah. And that might not save a lot of revenue next year or the year after, but it certainly reduces spending on all these programs towards the end of the budget window where you really need the offsets to make a lot of this stuff permanent.
Okay. So you can turn that dial. That's the thing about taxation. I guess there's a lot of dials you can turn. It's not these black and white policy decisions. Okay. We're almost at our time here, but what else are we missing? What do we want to leave the audience with on this incredibly in-depth discussion on taxes?
Yeah, I think the main takeaway is that there's this big cliff that Congress is addressing, and keeping taxes low is really important. But it's also important to remember that that the story that Republicans are going to want to tell is that this tax cut is pro-growth. And that requires not just keeping individual taxes low, which is important, but it's also really important to continue to lower taxes on businesses and investment, which are the things that are going to help bring investments back to the United States. This type of economic activity that then leads to higher wages, more jobs, and all the things we think about when we go back and think about the success of the 2017 reforms.
Yeah. Well, that's a good thing to leave people with, and good luck doing your taxes. Yay. All right, folks. See you next year, hopefully with your same tax rate. Otherwise, something went really wrong this year. We're out. Okay. Thanks.
Yeah, thank you.